Well, howdy there folks, and welcome into today's video. Hope you guys are doing great as always out there. So I had some people requesting in the video I released earlier to do a reaction video. So I guess a couple hours ago, the folks over at Everything Money released a video on Tattooed Chef. I'm assuming it's a negative video on Tattooed Chef, and so we'll get into this. Maybe it's a positive video, I don't know. I've seen a few videos from them, and one of the gentlemen on the show, he's a value investor, or at least he says he's a value investor, and so I'm assuming a stock like Tattooed Chef would not be very interesting to him, right? If you're a value investor, you're usually not messing around with stocks that have higher valuations, or a company that just grew branded revenue 62% year over year, right? They just released their quarterly results last week, 62% branded revenue growth year over year. Like, that's not a value investor stock. Value investors are probably interested in like Coca-Cola, Pepsi, Kraft, Conagra Foods, Campbell's Soup, like companies like that, right? And so a stock like Tattooed Chef that's growing massive in a space like, there's this massive movement around folks going vegan, right? Or partially vegan, or, replacing some of their items, their meat items with, just eating more toward a vegan diet. Let's just put it that way. It's a massive trend that's ongoing. I don't see this trend slowing down anytime soon. And Tattooed Chef's absolutely set up to be a massive player in this market, right? And so, we'll see. Obviously, they didn't release this video on the best day. I mean, Chef's having a great day today, but that could be one day. The gains could be gone tomorrow. You never really know with the stock on a day-to-day basis, okay? Obviously, I'm a long-term investor in this company. I'm planning to be in this stock for years to come in the future, and we'll see what the future holds, okay? So, I'm hoping this is a good video. It's 17 minutes long. I'm hoping they get into the fundamentals here and things like that, and I'm hoping we can have some debate and dialogue back and forth here. I enjoy, I kind of enjoy if somebody takes a negative stance, and maybe they don't. Maybe they take a super positive stance. I'm like 98% sure it's going to be a negative stance. So let's see kind of what happens here, okay?
Hey, welcome back to Everything Money. We're glad you joined us again. As always, it's Seth, Paul, and Mo. Today we're talking about Tattooed Chef. Paul, this stock is just, for me, it's a little frustrating at times.
It's a love-hate relationship.
Yes, you and I have done some videos of these. Actually, when we were in Mexico, your beautiful Mexican house, in January, I said, there's some chatter about this. Let's take a look at this. For some reason, the financial data has never matched up with our software, with Y charts, with Google Finance. But
us and Y charts has been correct.
That's right.
Has been similar, but Google Finance has had different numbers, which I actually look at Google Finance and think their number might be a little more accurate.
But regardless, folks, if you're scouring YouTube looking for information on Tattooed Chef or just investing in general, there are so many people talking about how great this plant-based food company will be. And they have been for months, Paul. Now, as we know...
I'm on YouTube pretty actively, and I can tell you there's not a ton of people that are talking up Tattooed Chef. At least not that I know of. I don't know of any other, what I would call super big creator on the platform that's talking up that stock. So I'm not sure where they're getting that from, but
the deeper and deeper I learn about this, and I learn from you, is like, there's just a barrage of hype surrounded they pick some random companies, Mo.
Yep.
If it's the meme side, it's like, it makes no sense.
It's crazy.
And they just, somehow they get together and pick these random companies, and then they keep jumping on board. Next thing you know, it's this echo.
It's definitely going to be a negative video. There's no doubt about that, okay? We're going negative.
The Tattooed Chef is the best thing ever. Well, sure enough, we had videos in January that we put up, and the financials were all over the place. We ended up taking them down because the financials were incorrect. But regardless, I think the trend is the same, Paul. This stock has since somewhat collapsed since its highs. And sure enough, like most hype channels, it's like when it's going up, it's a buy. And then when it's going down, it's a buy the dip. There's never bad news with this. It's still the...
We'll get into a lot probably in the course of this video. But as a long-term investor of the stock, yes. If the stock's going up, cool. If it goes down, buy the dip. That's like investing 101. That's not like some new age principle or something like that. Like ask Warren Buffett. Like if he loves a stock and he's buying into a company and the stock price goes down, what is he doing? He's buying. He's not like, oh, I got to sell the stock now or something like that. Like it's just,
thing ever. And anyway,
investing 101.
You can find how everyone just loves the stock. So I would like to deliver to you perhaps the opposite opinion about
Everybody doesn't love this stock. If you've been watching anything on Millennial Money, I argue against Kevin all the time. Meet Kevin would definitely agree with these gentlemen here, so they're definitely on Meet Kevin's side here about Tattoo Chef. You know, I don't get this whole thing like everybody in the world believes like Tattoo Chef's a great stock. Definitely not like that at all.
Just to maybe be careful out there. It is, if you're a young or new investor, it would seem that Tattooed Chef is a great investment. It just, everyone else is saying it, much like the Teslas and the Bitcoins out there. This has to be wonderful. And I would love to show you someone who's been doing it, who's been investing a different way for the past 20 years and been wildly successful at it, Paul. So give us your thoughts on Tattooed Chef.
Thank you, Seth. First off, guys, follow us on Instagram. Mo and I, we're trying to get our blue check marks. It's very important to our vanity. So when it comes to any sort of company, companies that are growing fast are very exciting. You look at this company, and back in January, here was the stock price, $26 a share, right? It's now at 16. Does that mean it's obviously bad? No, it doesn't mean that. Look at Alibaba. Alibaba's plummeting now, and I'm a fan of it. I keep buying more, right? And I hope all my stocks that I'm buying, Walgreens, Intel, Alibaba,
Hey!
are going.
Hey, we're Walgreens. Hey, Walgreens. Now I'm on his side, okay? I guess we're both Walgreens shareholders. I got 7 figures in Walgreens. Hey, we're both on the Walgreens bandwagon.
Go down
Okay.
so I can buy more.
No, make sure you clarify that.
That just won him like 10 points right there.
It sounds silly that you want to buy a stock and have it go down.
As I always tell people, what's your favorite thing in the world to buy? Is it shirts? Is it clothes? Whatever it is, investments seem to be the only thing that people want to buy more of as they go up in price, which always boggles my mind. Now, with Tattooed Chef, all I was making the argument is this seems like a very hyped up stock. People are buying it because it's exciting because they saw this, right? They see this and think this is going this way. I see this and think, okay, temporary overhype, especially when there weren't amazing fundamentals. Now, was it growing fast? Of course, guys. Look at Google Finance over here. Just in June, 45% increase from the previous June, right? Look at March, quarterly, 58% increase. December of last year, 47. It is growing like crazy. My entire thesis is based on, can you overpay for growth? A lot of people would say no, to which I say, well, then if you don't think you can overpay for growth, scratch that. They'd probably say yes, you can, but their actions would say otherwise. But my argument is, if you're willing to pay because it's growing 45%, does that mean 80% isn't better than 45? What's the right number? You sit there and say, well, at this point, this growth is enough. You don't have that number.
You have to run several year out numbers, and you have to run your revenue projections. How do you get to revenue projections of a company? You got to understand on a super high level, understand the industry they're going after. And you need to be able to say very confidently, 3 years from now, 5 years from now, I think this company is going to be able to do this amount of revenue top line. Now, of that top line, how much do you expect the company to have reached the bottom line? So for instance, for me with a stock like Tattooed Chef, I expect this company to do $1 billion of revenue in the year 2025. The company has said in 2026 they expect to do $1 billion. I think they're going to be ahead of schedule there. So let's assume my scenario plays out. 2025, they hit $1 billion of revenue. I expect the company to have at least 5% or 10% of that revenue to hit the bottom line, meaning I'm expecting at least $50 million to $100 million in 2025 to make its way to the bottom line. And obviously, that's just the start of the profitability, and hopefully they have years and years to go of revenue growth after that, and I have no doubt about that. But that's really the way you should be doing it. It has to at least make sense. When you run numbers a few years out, the valuation has to at least make sense. Tattoo Chef's been trading at a $1 billion something valuation recently, and I think the company should be able to command a massive PE even in 2025. Somebody could argue against that. That's fair play. We can argue that back and forth. But, you know, that's the way I like to do it.
Based on fundamentals.
I think this is where people have a foggy sense of how to invest. You know, growth seems like great. This is a growth stock. So how would it ever stop? Why would it ever stop? It has since slowed down a bit. So tell us, Paul.
Well, I always bring this example. Great. Which one is better, has better growth?
Obviously the bottom.
The bottom one. But if I only showed you this company, you'd be like, well, I'm buying this like crazy because look at its growth. Oh, great. Isn't this better?
Yes.
This is way better. People have a hard time of understanding that you can overpay for growth. Every investment is the present value of all future cash flows. Those cash flows include any cash coming into the business, any refinance money, and an exit sale at some point in the future. And that's what our software does for people. So I look at this saying, when you only look at growth numbers, you don't look at what's behind those growth numbers in terms of what you're paying for it, you have a problem. The other thing with Tattooed Chef.
So he's talking about there, he mentioned specifically what's behind the growth numbers.
Coming into the business, and he refinanced money in an exit sale at some point in the future. And that's what our software does for people. So I look at this saying, when you only look at growth numbers, you don't look at what's behind those growth numbers in terms of what you're paying for it, you have a problem.
Yeah, so when you talk about what's behind the growth numbers, I'm hoping at some point we get into the fundamentals of Tattooed Chef and we talk about the SKU expansion, store expansion, things like that.
The other thing with Tattooed Chef is their number of shares outstanding has skyrocketed in the last year. And this is something that people don't really realize.
This is literally the number of shares that exist.
That's how the company has 140 mil of cash on the balance sheet now.
In the world.
And the company's in such a strong capital position now that they shouldn't need to raise money probably forever, to be completely honest.
Will issue more if they want to raise capital to do more things, Paul. But with Tattooed Chef, it seems alarming.
Just look at September of 2009, 65 million shares outstanding. Today, 82 million shares outstanding. This is a 30% increase in the number of shares they have outstanding. And guess what, guys? As companies, small companies grow, they tend to issue more shares, especially overvalued companies. When you're overvalued, you want to...
If you really need the money, it makes sense. So like, for instance, Tesla is obviously one of the better stocks I've ever been in. Tesla, it made sense that they had to keep raising money because they've got to build all these gigafactories and things like that. Tattooed Chef, I think, can make a small profit in 2022, meaning a positive net income, or lose a very small amount of money. And when you have $100 million plus, 9 figures of cash on the balance sheet, there's, in my opinion, Tattooed Chef does not need to dilute shareholder value in any meaningful way moving forward. Now, they have the capital there for this business model, unless they make some crazy massive acquisition or something like that. But then if they make some crazy massive acquisition of some, let's say, other brand that's growing growing super fast, then all of a sudden that changes kind of how you look at the revenues and profitability of the company over time. So you get a whole other situation there you could also say on the flip side is a very good thing. But as far as dilution, this company should not need to dilute anymore, in my opinion. They're in a great capital position.
More shares, because your comment internally is, look at all these suckers out there who are willing to overpay for our stock. Let's give them more shares so we don't have to take on debt to grow. So we have to give away equity to grow. We can give away, actually they are giving away equity to grow it here. Go ahead, Mo.
I think you should break.
I hope this gentleman understands that, especially in this situation, the CEO, Sam Galletti, he owns like 40% of the company. So if he dilutes, he's diluting himself too. So I hope he understands that.
Down what share dilution actually does to the shareholder, because I think maybe a lot of new people who are invested in Tattooed Chef, maybe they don't understand what that shares outstanding number really does mean.
So let's say there's a company that makes $10 a year and there are 10 shares. That gives every shareholder $1 in profit per year. Now let's say they increase the number of shares to 12. They still make $10. All of a sudden now, you're getting 83 cents per share. So you're down from $1 per share to 83 cents a share, right? They go to 15. Now you're at, 66 cents a share? So same profit, but all of a sudden you're splitting up amongst more owners. If you own one share, you go from owning 10% of the company to 8.33% to 6.66%, all from them just increasing their shares outstanding. In this situation, they increased their shares by 30%, let's say. So they took their 10 shares to 13. Now you own, 6% of the company overall? 7% of the company overall, 7.5, whatever the number is. You went from $1 to 7.5% of the company. We went from 10% to 7.5%. Guys, this is a silent killer for investment that most people don't even understand. They don't look at that part, and this is so important. The same goes the other way. When companies that are undervalued are buying their shares back,
You could say silent killer if the company's not doing anything with the cash, there's no need. But you look at an acquisition like they just had a New Mexico Foods company where they can get factories, where they can get a workforce there and other brands as well. There's obviously a lot of cost synergies there and a huge revenue growth, so it can make sense. And if the company didn't ever, raise capital, let's say, they probably wouldn't have been able to do that deal. If I recall, it was a $35 million deal. So some food for thought there. Tesla had to raise money a million times along the way, right? Not every company that raises money is a good company. We know this. But the ones that have the management teams with their head on straight, they obviously, from whatever they dilute, they make way more back than that. Let's keep that in mind.
They're giving you more of their company as a way of driving up your share of the company and your share of the profit. And small companies that are growing fast will dilute you. So as an example, if a company that's making $10 per share goes to 20, but their number of shares goes from 10 to 20, not in a
And also, just so you know, almost every single company in the world that's a public company dilutes shareholder value. I don't know of one that doesn't. Some companies will try to offset it by doing share buybacks, essentially. But every single company is always pretty much issuing shares. Like, you know, look at the S&P 500 and tell me how many of those companies haven't diluted shareholder value over the last couple of years. You're not going to find many.
stock split, just issuing more, guess what? You gain nothing as a shareholder.
Yeah.
They doubled their profit and you gain nothing. That's the problem. So even though their revenue's up 45%, they increased their shares by 30%. So you didn't get that much of a benefit. And this is where we're trying to tell people, we're trying to teach those out there who are open to it, that there's more to it than just looking at these numbers. There's things the company can do to hurt an investor and that people always miss. Right?
Or they don't
Hurt an investor?
Or they don't know to look for. And that's why you're here to learn, because this gravitates towards you. I'm not trying to be Debbie Downer. I'm not trying to be negative. I'm very optimistic about the U.S. economy and the stock market over the next decades. But temporarily, for the next 5, 6, 7 years, it's going to be a rough go of it for stocks. Just based on valuations, and history has shown this. Does that mean you can't find value? No. But I just always advise caution when it comes to overhyped stocks, that the average person on YouTube who has no backing for it, has no reason for it besides they see a lot of hype and they're trying to gain money from YouTube watchers. Just be careful. That's all I'm asking.
I hate this generalization of like, everybody's an idiot. They don't know what they're doing. Like, oh gosh, it's painful, man.
Look at it as if your neighbor came to you who owns a mechanic shop and said, hey, come buy part of my mechanic shop. You would do your due diligence. You look at the financial, you'd understand.
Okay, due diligence. When are we going to start talking about the fundamentals of Tattoo Chef? When are we going to start talking about the store expansion, the SKU expansion, their products? Are we going to ever get into the actual business, like the fundamentals, or are we just going to talk about these random subjects?
That's a no-brainer for most people. I mean, if you were to buy a business, you know, what do they do? What do they make? How much money do they make?
Let's talk about that.
I always bring the example. One of the biggest Tesla fanboys I know owns a house in Mexico near mine. And when I offered him a share of my
bigger house too, probably. Just kidding. Okay, just kidding.
Of a house I was buying, he said, well, let me see your business plan. Let me see what you're trying to do with that. I'm like, oh, suddenly this matters. Suddenly my plan matters. And it was very interesting to me that he looked at a stock very different than he looked at an individual business, but the exact same thing.
And you say this too, Paul. You say, you know, a dollar bill is a dollar bill, but I've used this reasoning against someone who's like arguing against it, like investing in Tesla and Bitcoin. I said, at the end of the day, a dollar bill investment is a dollar bill. And he said, yeah, I'd hate to only make a dollar. Like,
please don't compare crypto to stocks. Please don't do that. Come on, man. Please. Gosh. What is Bitcoin, Tattoo Chef now the same thing? Like, come on, man.
I'd like to make 10x, 100x.
And guess what? Growth does matter. If a dollar today is still a dollar today, no matter where it comes from. However, if another company was going to make $3 tomorrow and that other company was going to make $1, I would pay more for this. But what happens in the market is people go, look at that growth. I'll pay 10 for it. This company's not growing. I'll pay $2 for it. Well, I'd rather own this company at $2 and this company at $10.
I think that's the gist of it, right?
That's the gist of it. Are you overpaying for that growth? And usually the answer is yes. Growth is way more exciting. I like growth. But I like growth. It's just a little bit of growth. Why? Because people tend to ignore a little bit of growth. They want the 30, 40, 50% growth. Like, oh, this is going to the moon. Well, go look at 2000. All those companies on the internet had the world in front of them. They were going to change the world. How many of them went under? They all, I mean, 90% of them, 95% of them went under, went to zero. Why? Because it just didn't work. It's no different than today. Do I believe Tattoo Chef? I haven't looked at Tattoo Chef in terms of, and for those of you out there who are going to criticize and say, you didn't do your due diligence. Exactly. I don't need to do my due diligence on a company to see that they're diluting me, that people are overpaying for the revenue.
What? You don't need to do your due diligence.
Profit. I just look at it saying, guys, I don't understand how I can justify. There's so many other options out there that I think are obvious value plays to me. Why would I go find the hype so I can hope that this one, by the way, what's the market cap of Tattooed Chef?
It's about $1.3 billion.
$1.4 billion.
$4 billion.
Okay, great. What can they become? Can they become a $50 billion company? Sure. But what's going to happen between, the future is unknown. Yet whenever it comes to hype, We always think the future is a direct line. Oh, this is obvious. Oh, is it though? Is it?
The future's unknown for every single public company out there. It doesn't matter if it's a value, a div, a growth stock, anything. I invest in all three, and I can tell you always the future's unknown. You got to try to make the best of whatever situation you got and try to invest in where you believe is going to grow in the future, right? That's like that for everything. Walgreens, hey, you're invested in that stock, man. I'm invested in that stock. We both look at the valuation. It looks very cheap. I think they're going to get back to growth. I'm a huge believer in Ross Brewer coming over the company, right? Things like that. But we don't know for sure. Like this, none of this is in this game is a for sure thing. So, you know.
I look at it going, this company doesn't even make money.
Yeah.
I mean, well, maybe they do.
The brand is like 3 years old. I hope, you know, he says he didn't do any due diligence on the stock, which I just find laughable that they're putting out this video, and he says he doesn't do any due diligence on the stock. The brand's been around for 3 years. 3 years.
Wait, let's look at see their numbers.
Cisco and Intel were the same
they lost
situation back in 2000.
So their recent net income was they brought in $50 million in revenue and they lost $53 million. Sick! So they spent.
It was a
more than
one-time
they brought in
expense,
revenue.
but he doesn't do any due diligence,
It's
so
just
how's he
not
going to know
fun,
anything?
Paul, to have this disciplined and value investing mindset.
It's not fun.
Where we find boring companies.
It's boring.
And so when you say the words
not
tattooed
boring.
chef at a party to your friends, like 10 people light up as this is the best thing ever. Meanwhile, I'm the guy in the corner.
You say that to your friends at a party, and not one person's going to know about Tattoo Chef stock. Just straight up, coming from the Tattoo Chef guy, okay?
Like, these people are bonkers.
All the good news is we'll still be your friend. Tim will be your friend, won't you, Tim?
Thanks, Tim. Mo, are people trading tattooed chef in the Bid-Ass Nation?
You know, to me, this is not something that you want to take some kind of long position. This is more of like a swing trade or a day trade, because when you get these, let's go to the daily chart. and
Oh,
just look at
gosh.
these.
So now it's not a long-term investment, but you should be day trading it or swing trading it.
Surges of volume that you get every once in a while, because this is not something that value investors go to, and it's not something that your financial advisor is typically going to go to. But every once in a while, especially on earnings, you're going to get these little pops, and you can take advantage of those. And I would go and swing trade those, or more importantly, I would go and day trade those, because Seth, as you know, when you get
See, the thing about me is, you know, I've seen, you know, especially that other gentleman, if we want to call him a gentleman, I've seen him blast YouTubers, you know, and call them idiots and they deserve to lose all their money. You're not going to hear me say that. You're not going to hear me call him an idiot or anything like that, but it's just like, this is ridiculous, man. I'm still waiting for when we get into the fundamentals. But he said he didn't do any due diligence on the stock, so I don't know if we're even going to get into that.
pops in volume like this, you can go and just crush it in the day trading area. I mean, you could probably make 4 and 5% a day.
What kind of volume are you getting on those huge?
So this big one right here, that's about 10 million. These little smaller ones are about 4 million, and then consistently it gets 900,000 to a million. So you can see that people are really, it's hype when it's hype.
Paul, is it possible that 4 or 5 hype YouTubers get on a train of talking about this stock over a week and can manipulate stock prices like this? I mean, if there's 1 million trades in a day and someone has 600,000 followers, I'm not saying obviously a very, very small percentage might actually trade this, but what
600,000 followers.
What are people? Why are people talking?
And don't forget, when you get that kind of volume, it's not only YouTube, it's CNBC, it's Fox Business, it's all of these it's every avenue.
Yeah, because they're oh gosh, oh yeah, because they're talking about Tattooed Chef on CNBC all the time. Oh yeah, and Fox News and oh gosh, what I was not expecting this bad. Like, come on,
And
man.
had different numbers, which
Oh goodness.
Question is it probable? Now, shares outstanding. I'm being very, very low. They did 26% increase in shares in the last year alone. I did 10, 12.5, and 15% increase in shares. According to this, it should be. But I also.
Okay, so now he's plugging it into a calculator and thinks that's going to give him his you know, what the stock price is going to do. Sure, that's what Warren Buffett does. Warren Buffett, he just throws it in a calculator and it's like, woo, now I know exactly where the stock's going. Come on,
Be
man.
conservative on the share change. Profit margin, I went way higher on the profit margin. 579.
Now you can't comment like this when you say you did no due diligence on this stock and you don't speak about the fundamentals and the store expansion, the SKU expansion, what's going on with this whole movement toward more plant-based items. You can't just start throwing out, oh, I think profit margin this, revenue growth. You can't even do that. You're not in a position to be able to do that. Now you're just throwing numbers around, and it's just ridiculous.
Free cash flow did the same thing. Guys, PE, I did 20, 25, and 30. I think this is way too high, but I'm just trying to prove a point here.
Way too high?
I hit my analyze button.
Way too high for a company that just grew branded revenue 62% year over year? Okay. Whatever.
Guys, I don't even have it worth, I mean, only if your assumptions on the high side are accurate does it make sense to own the stock. Literally anything else, I look at it going, okay.
I don't even know why he's got it worth $5. It should be worth like $1, maybe 50 cents.
Oh, a lot's going to happen. So really, if you buy it today, you're going to do very, very well, assuming everything I did above actually hits. Listen, I think Amazon's a great company. They didn't hit their revenue numbers and profit numbers for like 15 years. Like literally analysts were wrong time and time again, going out 5, 6, 7 years. It's just very difficult. It's extremely, extremely difficult. And I think those dilution, I think they're going to dilute people even more than that 10 or 50. I think they're going to dilute people maybe 20, 25% a year for the next few years just to be able to justify their growth levels.
That's typically what.
Why would they? Like, okay, if you're going to make a comment like that, an accusation like that, they're going to dilute. Why? Go ahead. Like, why would they need to? It doesn't make any sense. Like, the company's in a great financial position, unless they have some huge losses. Like, go into why you think they're going to have to dilute shareholder value 25%.
Companies do, and then on top of that, assume that they can do 50% revenue growth for 7 years in a row.
It's just it's a tough.
Everything has to fall in line perfectly.
It just could it work? Absolutely. But I'm just sitting there saying, if you have 100 tattooed chefs, you're going to lose a lot of money on 98 of them, and you might find the 2 that hit it, and you probably won't make your money back. I always bring the example of .com numbers. So if you invested in every .com stock back in 2000 and today, you made 3% a year. The market did about 7% a year. And of that 3% a year, 80% of it was Microsoft, Apple, and Amazon. And Amazon's up 20 times from its peak of 2000. So you have to be right on. So even then, you didn't beat the market picking all the .com stocks that, by the way, had the future potential of the world. Nothing was going to stop them. This is the world of the internet. It was changing the world, and it did change the world. But still, companies can fall even when they're changing the world. That's just the bottom line.
You'll read in the comments below that we don't get the growth. We're wrong about this one. And I implore you to maybe read a book about the most famous investors in the last century. They all think this way. They can look at a company and then literally in the first 30 seconds see if it's a buy or an avoid. And for months now, Paul, this has been very obvious for us. People want to buy companies.
Yes. Investors can all look, and within 30 seconds, they know if a stock's a buy or not. Baloney! Like, give me a break. Warren Buffett's like sees. Oh, let me see. Oh, it's been 25 seconds. Yep, it's a buy. No, that's not the way it works, man. Like, come on. Like, I expected better out of these guys in this video. I really did. Like, if you want to get into why you think Tattoo Chef's going to get their socks knocked off by this other company, and why you think Target's not going to take more SKUs, and why their sell-through is not going to be there at Kroger stores, and why Walmart's not going to take more inventory, and why they can't expand in the United Kingdom, why they can't expand internationally. If you want to go into all that, let's go into all that. That would be a great video. This was not a great video. This was just trying to categorize a Tattoo Chef as one big hype stock and talk around different points and compare it to the tech bubble and this and that. Like, it was, this was disappointing. I expected better from these guys. I would appreciate it when these guys watch this video, which they will. I would appreciate it, guys, if you made a really actually in-depth Ttcf video on the fundamentals. Explain the fundamentals. Explain to me why they can't get into more stores. Explain to me why the sell-through is not going to be there for this brand. Get into those points. Get into the fundamentals of the business. That's what I would love to see, and then we can actually have an educated debate on this stock. But what this was just a whole bunch of talking around points, talking about you didn't do your due diligence, categorizing it as they took some massive loss without even understanding that was a one-time expense there, saying they're going to just dilute a bunch of more shareholder value just because they did last year, when now they're in a great capital position. They don't need to do that. That's all this was. This was no fundamentals. This was no getting into the numbers. This was no running actual projections. And then let's just throw some numbers into a calculator and have it spit out something. It just was not a great video from these guys on this. And for, I expected better. That's all I'll say about that. And I hope they at least give Tattoo Chef the light of day. If they want to say Tattoo Chef's a $4 stock, a $10 stock, $15 stock, whatever, respect. but get into the fundamentals around this company. Get into what's going on in the business model. You know, get into some of those things. That's all I would appreciate. So, you know, I spent 31 minutes of my life just doing this, and, you know, I managed to not call this guy all the names he calls other YouTubers, but, you know, I expect better, and I hope they'll at least give the chef the light of day to actually talk about the fundamentals next time and really get into the numbers and where they can see net income going over time, revenue going over time, and things like that. And don't say, oh, I don't know where that could go over time. BS. If you're a value investor, you should be able to run those projections and run those numbers out and understand why a company's going to grow at this number, this number. So that's all I can ask for. Anyways, hope you guys appreciate me doing this video here today. I don't do a lot of this, but, you know, I saw enough people recommending it in the comments because I guess it was a talk about thing, and I was just expecting better. And I hope they put out a better video on the chef in regards to fundamentals. That's all. And we would all appreciate it. Like, you know, and then if you want to say it's worth $5, $10, do it. Let's hear about the actual fundamentals. Appreciate you guys. As always, much love and peace.